Good afternoon, everyone. Thanks for joining session 5 of 6 in the Student Financial Wellness Workshops. As a reminder, these are recorded and they're being uploaded to the Allen Hancock YouTube channel, as well as the Title V website. So if you're joining us asynchronously and you want to check out the other sessions, they are available. We are covering the topic of Are You Credit Ready today? And CJ Julef is our presenter. And I don't want to waste any time as usual. So CJ, take it away.
Will do. Thanks so much for having me. This is an exciting topic because who doesn't like credit and who doesn't hate debit? So we're going to cover both of those in one fell swoop. So I'm hoping that some of you had a chance to maybe check out your emergency fund needs and that you're still breathing when you discovered that there was a lot that you might need to do for that. But let's get started with this workshop. As you know, we have two purposes. One is to give you the opportunity to become more financially comfortable in your own personal skin, but it's also to give you some tips and tricks and resources to start a conversation with peers, students, family, and friends. So let's start out looking at some trivia about credit cards. Does anyone know what year the first card that could be used in multiple locations was offered? So this is not just the one card that you can use at Kohl's or something. Anybody want to take a guess at what year that was? You might be surprised. $1950. So Frank McNamara was the head of the Hamilton Credit Corporation, and he founded the Diners Club card. That was the first card that you could use in various locations. He claims to have had the epiphany of starting a credit card company after a business meal at what was once quite a famous establishment in New York City called Major's Cab and Grill. And before going to the restaurant, he changed suits and left his wallet in his other suit. Well, that was his excuse anyway. When he realized he'd forgotten his wallet, he thought about how useful it would be to have a card you could use instead of cash. And I know that doesn't make sense because obviously if he changed his wallet into one suit from another, it wasn't going to make any difference. He was still going to be without that, but we've got to go with the legend. But in any case, the Diners Club card was an instant hit. Although it could only be used at 28 restaurants and 2 hotels, it did become a status symbol among New York businesses' elite and grew to 10,000 members within the first year. So our second trivia is, in 2020, what percentage of households depended on their credit cards to pay their basic living expenses? So we already know that we use a plastic for a lot of reasons, but when we look at just living expenses, so paying the rent, paying the mortgage, utilities, insurance, anyone want to guess what that percentage was in COVID times? Great guess, Miguel. It was 37%. So that may not seem high, but again, we're talking not about buying things that you just want. We're talking about trying to handle the necessities. So I've got 2 more questions for you, but this is a really good one for a barbecue this weekend. You can be sort of psychic. So how can you tell which industry issued the credit card? Well, that is a credit card company, but the actuality is that it's the first 2 digits of your credit card identification number. Identify the type of industry that issued the card. So if your credit card number starts with a 1 or 2, it was issued by an airline. Number 3 is for companies in the travel and entertainment industry. So all of Diners Clubs and American Express cards start with a 3. Numbers 4 and 5 are for banking institutions. So Miguel, if it starts with a 4, you have a Visa card. If it starts with a 5, you've got a MasterCard. Number 6 is for merchandising and banking. 7 is for gas cards. 8 is for telecommunication companies. And 9 is used for national assignments. So you can just ask somebody to pull out their card and put their hand over the logo, and you'll be able to tell them what it is. So how many credit card transactions occur around the world every second? every second. How many credit card transactions occur around the world? Well, it's actually not billions or trillions, because we're talking about a system that can only handle 15,000 transactions settled per minute. So the transactions of every second are 10,000, but they all add up to those millions and trillions, obviously. So we talked about the psychology of money, behavioral economics. Then we talked about spending and financial planning. Then we talked about saving and investing. And now we're going to talk about taking a look at managing our credit. So let's see what that's going to be all about today. So our learning objectives today are going to be about exploring advantages and disadvantages of credit, understanding the 5 C's of creditworthiness, which is important if you're hoping to get credit, discover what impacts a person's credit score, recognize good and bad debt, consider the consequences of excessive debt, and list some strategies to manage credit, to use, and to reduce debt. How are we going to do that? Well, first of all, we're going to look at the pros and cons of credit. We're going to check out our credit IQ. We're going to look at the 5 C's of credit, what's in a score, good versus bad debt, and managing debt. So the question is, are you credit ready? So I'm going to ask Maria to put into the chat box the writable, fillable form that gives you a chance to just answer 10 quick questions. It's a multiple guess questionnaire, and do it with some fun. I'm going to pull mine up so that you can see it as well, in case you need to get a hold of it through me. If you're going to be using my screen, then I'm going to pull this up a little bit. But it's just an opportunity for you to read a situation and pick one of the A, B, C, D answers that fit with how you feel today. And again, if you're using my screen, we'll only be able to have you answer 1 and 5, and then we'll go down, squinch down so you can answer the others. But it is available through your chat box. When you get done with it, you have an opportunity to score yourself and find out if you're credit ready or not. Again, if you're using my screen, I'm going to squinch down, give you a chance to answer 2 and 6. That's sort of a crazy way to do it. Oh, and you can answer 7 too. 2, 6, and 7 on my screen. And we'll pop down to 3 and 4. And give you a chance to do your score. So the question is, are you credit ready? This is a great activity to use with students or family and friends, because it's not really questions that you think about, but this goes back to our feeling about money, our relationship about money. So, number one, when you borrow money from a friend, you feel, well, you might pick C. Only interested in paying it back when your friend complains. Willing to repay, but not in a hurry. Then do you often shop impulsively? Well, I might have to put frequently. So I might not be credit ready. So important things to just take a look at and see what you need to do in order to be credit ready. So now we've got an opportunity for you, if you would, to join us at mentimeter.com. And if Maria will put in the secret code, but we're going to www.menti.com. Use the code 6133 2448 and let us know when you hear the word credit, what does that conjure up? So I'm going to pull that up and hope that you'll join us here. Oh, that's not the right one. Sorry about that. I'll catch up with you in just a moment. I think I will. Ha. Stand by. Technical difficulties are always fun to have. You keep typing away and I'll see what I can find out. There we go. All right. I'll pull this up on the screen. So I've got a couple people who have answered that. Love to have more. All right, borrow money, debt, uncertainty. Appreciate that. Now that I've got it up here, let's see if we can get one or more people to join us with this. But these are the words we associate with credit. And those are great words to put together, especially I love the uncertainty. Well, thanks again for dealing with my technical difficulties. We'll just go ahead and take a look and see what it is around credit and debt that most people think about, because indeed there are some pros and cons, and we need to pay attention to those because we want to talk about credit with a sense of confidence. So what are the advantages? Well, first of all, it's not free money. We all know that, but it certainly is safer than cash. So who wants to walk around with a roll of dollars? It's an invitation to be robbed, and it's inconvenient to boot. So if you're planning a major purchase, it's much easier and more convenient to actually pay for it with plastic. And if there's a problem with that particular transaction, you have, of course, a recourse. You can go ahead and talk to the company, credit company, and say, hey, stop payment on that. So that's nice. It's useful in emergencies. It's convenient. You can purchase something today that you may not have the money for, but hopefully you'll have the money when the credit card statement comes. We know that it's sort of a necessary evil, difficult to buy things online or via phone. And if you want to reserve a hotel room or rent a car, they're asking for a credit card up front. Most importantly, though, it builds credit history. At least it does in a positive way if we have responsible use. So your credit history is what enables you to purchase a house, impacts possibly a hiring decision in some state. It impacts your car insurance premium. And the difficulty is if you only pay cash, you don't have a credit history, and then buying a large item is very difficult and probably puts you at a higher interest rate. Well, those are great, but what are the disadvantages? Well, you actually do spend more when you use plastic than with cash. I mean, think about it. When your $20 bill in your pocket is gone, it's gone. You can see it and feel it. But when you use a credit card, that piece of plastic, it sort of makes you sense, well, there's no real transaction. So why do you think that fast food restaurants finally decided to accept credit cards? They didn't for many, many years. Well, McDonald's did their research because they always do, and they discovered that consumers in their pilot spaces, that the consumers that used credit on average purchased $10 to $12 more than consumers who had cash. So when they say, would you like fries with that? If you're paying plastic, more than likely you're say, yep, biggie size and an apple pie. Well, you do pay more if you do not pay it off every month. So when you purchase an item and you think, oh, I'll just pay back half of it, you'll discover that, of course, you've in the long run paid more for that item than if you'd paid for cash. So an item that you purchased for $100 will in fact be costing you more than $100, depending on how long you take to pay it off. So anytime that you use credit, obviously your lender is required to tell you how much the loan is going to cost you in the form of an annual percentage rate. And that represents the rate at which your balance will compound each year. So you want to make sure that you pay your monthly, not just the premium, but the monthly balance off every time. But most importantly, debt hinders you from saving and investing. So having debts and paying them off over months or years creates a major obstacle to saving and investing. So instead of saving money, you're forced to pay for items you purchased in the past. And that can damage your credit score, which has some unfortunate long-term impacts. Well, now that we've taken a look at what the credit's positive and negatives are, let's go ahead and check out our credit IQ. So Maria, if you'll put the credit IQ into the chat box, you can take a sense of just exactly what do you know about credit and what do you not know. So this is a great opportunity to do some quick check-in. So again, if you're going to be using my screen, there are just some very quick 10 true and false that you can take a moment to take a look at. Let me get all of them up on the screen if you're using my screen. But again, this is a they're 12, writable, fillable PDF that you can access. Don't overanalyze, just go with your first reaction. Give me another minute to wrap up this. All right, hope that everybody had a chance to finish that up. Let's take a look at some of the things that we know to be true. So the first question is, placing utilities in your name is a great way to build credit. Well, I hope that you actually said false, and we'll talk about Experian's offer in just a moment. But most utility companies do not report your payment information. Now, Experian has been on the news, on the radio, on the television that say, hey, do the credit booster. Join us at Experian and go ahead and input your own information. So Again, it's not being reported by the utility company, but you're giving them an opportunity for Experian to check in to see, are you paying your utilities on time? Now, the difficulty is that it only boosts your credit if you are. But once you miss one of those utility payments, bada bing, your credit score is going to plunge. So I would think twice before I got excited about that Experian booster. My concern is that it boosts it like 10 points. We're going to look at what actually is part of your credit score. So again, this may work for you, but I'm going to suggest it's probably not the only thing that could help. So missing one payment will not impact your credit score. Well, so gosh, I wish it were true, but it is not. Even one late payment may be indicated on your credit report and impacts your credit score significantly. When we look at what makes up your credit score, you will see how important it is for you to be in control. Well, using your debit card wisely will help you establish good credit. Now, you may think that's a silly statement. Of course, that is absolutely false. But remember, look at your debit card. It comes with a logo that says it's for credit as well. And when you are at the grocery store or Target or wherever you might shop, and you pop in that debit card, it asks you, would you like it to be credit or would you like it to be debit? So you're thinking, oh, wait a minute. I don't really have much money in my checking account. Yeah, I'll put this on credit. That's not how it happens. The only reason it asks you if you want it on credit is that it stops you from having to put in your personal PIN number. Not all of those card readers will let you do that because some of the card readers are smarter than others and they'll say, this is a debit card. Go ahead and put that those four numbers in. But many credit card readers say, okay, we'll just take it as credit, but that money comes out of your debit card account, i.e. your checking account. So just remember that using your debit card doesn't have anything to do with your credit score. Number 4, all credit cards are created equal. Not so fast. So I'm going to encourage you, if you are looking to access credit via a credit card, check the fine print. And I mean the fine print, the print that is so tiny that it is microscopic, because that's where you're going to find the terms, the rates, etc. And even if the envelope that the credit card solicitation came in says, wow, 0% interest, and you're thinking, this is the card for me, the fine print will say something like 0% interest on your balance transfers, but everything else will be 26.6. So check the fine print. A credit card comes with a credit limit. It's true. Limits are determined largely by your Fico score. We'll talk more about that. But let me share with you that originally, the reason that the American Express card was so in demand and such a status symbol is that American Express never put a credit limit on the card. Well, not exactly. The reality is that you had to pay back every penny every month. So the limit was really your limit. So clearly, if you had a lot of money, then there you were. You were able to actually pay it all back and then start all over again. So interestingly enough, they didn't make any money off the card because everybody was just paying it. They had a membership, but it wasn't that high. So then they started to see Visa and MasterCard come in and they went, well, wait a minute. How come? Oh, they're making money off of all the people that don't pay their balances off every month. So now that's why you have a variety of American Express cards. So Miguel, thanks for your question. The question is, if it helps if you get a secured card at a bank, yes, that will help build your credit. It's a prepaid card in essence, but anything that you can do to show that you are credit worthy, and that can be one of the ways to do that. So thanks for the question. The next question is, you may pay the full amount at any time. And the answer is, oh yes, please do. Because if you do not pay the full amount each month, then you will incur fees. And that's why using credit can sometimes cost more than using cash. 7, there are only 2 credit reporting agencies. There are 3, Experian, TransUnion, and Equifax. Important to know that all 3 of those are reporting on you, and we'll look at to whom they report in just a moment. FICO, we've talked about FICO just momentarily, stands for Federal Insurance Corporation. That is not true. FICO stands for Fair Isaac Corporation, which is a privately held company, which has the market on credit scores, which we'll talk about in a moment. We've already mentioned this, so hopefully everybody got this correct. People spend more money when they use credit. The answer is absolutely, because credit involves simply swiping plastic or signing a form. And so people do tend to spend more money because they're not scrounging around in their couch or their car looking for pennies to pay for something. 10, everyone is entitled to as much credit as they want. Not so fast. Credit is based on your ability to repay. So clearly, one of the things that we always sort of tongue-in-cheek chuckle about is, gosh, you need to have money in order to get a loan, which sounds obviously counterintuitive because you don't have money, so you need the loan. But the reality is you need to have the ability to repay the loan. Now, in some states, your car insurance rate is tied to your FICO score. Well, I sort of gave you a hint about that. The answer is true. In many states, insurance companies consider a low FICO score indicative of poor driving. However, you're lucky because you're in California, and California prohibits the use of credit-based premiums. I live in Colorado, and Colorado does not prohibit the use of credit-based premiums. So depending on my credit score, my insurance may go up or may go down. The last one, having no credit history is the way to go. Well, it sounds like a dream come true, but it's false because before you can make a major purchase, a car or house, you must have a credit history. And that's important because you must have a track record that shows that you do indeed have the ability to repay the loan that you just asked for. So we're going to try one more time at Mentimeter. It's going to be the exact same code that you had before, but what constitutes creditworthiness? So that's the question. The code is the same, 6133-2448. And hopefully this time I can get where I need to be in a much more expedient fashion. So the question is, what are the 5 C's of credit? And if you can only come up with one, go for it. If you can come up with 2 or 3. But obviously the trick is the words all begin with the letter C. So take a moment to see if you can think about, what do we think when we say, are you credit worthy? What are we looking at? What makes up that credit worthiness? Cash, love it. What else do we have? Well, this is a tough question. So let's go ahead and cut to the chase and find out exactly what it is that banks look at when they are trying to determine, are you worthy of a loan? Are you worthy of credit? Well, there are 5 C's, and this is what lenders look at. They look at first, character. So have you used credit before? And did you pay your previous bills on time? The next is capital. And when we look at capital, we're talking about your income. What is it? What do you own of value that could be used to repay the loan? The next piece is capacity. When we look at that, do you have a job or other source of income with which to make payments? Do you have other debts that you will need to manage along with this new credit? Now, I'm going to stop here for just a moment because these three are usually the most often looked at by lenders. These three are the most, have the most weight, and some lenders only look at these three. But other lenders look at all five, and so credit history comes to play, and that really makes a difference. So qualifying for different types of credit hinges largely on your credit history. The track record you've established while managing credit and making payments over time. Your credit report is going to be where that information is most detailed. And then there's collateral. So if you're applying for a secured line of credit, then you're going to be looking at having that collateral. Sorry for the dogs barking. So if you have a automobile and you're getting a loan, an automobile loan, that collateral is your car. If you aren't able to pay it, then they're going to repossess it. The same, unfortunately, with your house. If you're not able to make your house payments, then they're going to go ahead and at some point in time foreclose, and then you're going to have that situation happening. So any questions about these 5 C's? Important for you to know about them.
CJ, for students that are maybe, I've gotten this question before in another banking workshop, that are maybe, freshly out of high school, kind of, not even maybe independent from their parents' taxes yet. Do you have any advice for them on when is a wise time? And I know it varies, but if they don't have a credit card yet, and they're thinking about it because of these reasons, because of credit history, and, do you have any advice or guidance for someone that's like 18, 19, 20 years old and is thinking about opening a credit card?
Yes, well, in most states, they can't until they're 21, unless they have a person that will co-sign with them. That's based on the Credit Card Act of 2009, because if you were a college student prior to 2009, the moment you hit campus at orientation, you were inundated with every single possible offer for a credit card. And you were able to get pizza for a lifetime. You were able to get the local gym to give you a duffel bag, anything to add to the mix. It is that situation where we saw college students running up incredible credit card debt, not student loan debt, but credit card debt in sometimes as high as $30,000, because credit companies were happily giving you a credit card for $5,000 max on your limit, and you were happily as a student paying that off. So what I encourage is then, while we're on this topic, let's talk about the unintended consequences of the Credit Card Act. What began to happen on college campuses is that all you needed was somebody 21 to sign for you. So think about being an RA, nothing wrong with being an RA. Think about being, somebody, or maybe just you could even be the student leader on campus, whatever. And you're over 21. So I come to you and say, hey, listen, I really, really want a credit card because I really want to go to spring break, and my parents will kill me if I leave for spring break, but they also won't give me any money. And so what do you think? And so the person who is 21 and over says, yeah, I'll be happy to sign that for you. But it'll be a little charge, maybe 50, maybe 100. Well, that's okay, I say to that person, because I want that credit card, because I want that ticket. Well, that's great. I have my wonderful trip and off I go. And guess what? I don't come back to campus the next year, and the person who signed for me can't find me. And who's going to be responsible for that credit? It's going to be the person who signed for it. So it's a bad get rich quick scheme, because in the unintended consequences, a lot of students ended up with somebody else's credit as an issue for them. So to your question, though, I encourage parents to get their students a credit card. And I'm only talking about Capital One because it's one of the few cards that you can get for $300 or $500. MasterCard and Visa aren't interested in that per se. But Capital One will give you a credit card with a max of 300 or a max of 500. And that gives you the opportunity to experiment with credit without being so down, so much in debt. To Miguel's question, yes, you could also go to a bank and get a secured credit card, which means that you put in $1,000 your freshman year, and that's all you got. You got $1,000 to spend, and that's a good way to experiment with that as well. But the piece of the puzzle is to really start out small, because here's the other thing that people don't recognize is that credit card companies are looking for deadbeats. Deadbeats are the people who do not pay their credit cards off, the monthly balance off every month. Now you'd think they wouldn't call them deadbeats, but they're deadbeats because they don't want them. They want, deadbeats are the people who do pay off their credit card balances every month. They don't want deadbeats because they want to rake in the dough on the interest that they're charging you for the use of their money. So they want you to continue to string out your debt so that you are constantly paying over and over again for the same thing. Having said that, what they'll do is if you are a good credit user, they will then up your credit limit. Well, for a lot of students, that's when trouble hits, because I was okay managing that 300, or I was okay managing that 5. But bada bing, you went to 1,500. Whoa, that's a trip to Vegas. So there are some caveats in all of this. Is that long-winded answer, Maria? But
no, that's perfect. And it's not a simple, there's no way to simply answer this. So I appreciate that. Thank you. It's really good advice.
Absolutely. So let's talk about what's in a credit report, because this is going to follow you for life. It's personal information. It's your account information. It's collection accounts. It's public records and bankruptcies, judgments and liens, and it's inquiries. And so it's important to know that that's what's out there. And then who's reporting to whom? Well, your 3 credit reporting agencies, Experian, TransUnion, and Equifax, are happily reporting to Fair Isaac. They're happily reporting to a lender. And this is just this nice little tornado happening right in your world with your financial personal wellness at stake. So the question then is, well, wait a minute, what's in a credit score? But before we do that, let's talk about how long your derogatory information stays, because unpaid student loans, that's a forever. They will never go away off your credit report. Bankruptcy is 10 years. My favorite is collections, because I can't figure out why it's 7 years and 180 days. Late payments, 7 years. Repossession, 7 years. And inquiries, 2 years. So the most important thing for students to know is that unpaid student loans will never go away. So better to figure out how to pay them. So do you know what your current FICO score is? Do you know what information is used to calculate your FICO score? Do you know what you can do now to raise your FICO score? And do you know who looks at your FICO score? Well, kudos to those of you that said yes to every one of those. And for those of us who perhaps answered yes to 1 or 2, not bad. But today's our lucky day. If you did not answer in the affirmative to any of these, today's the day that you're going to be able to answer yes to all of these, because we're going to start looking at what's in a credit score. Well, a credit score is simply a number based on a snapshot of your credit report that identifies your credit risk. The most widely used happens to be FICO. Oops, sorry about that. Happens to be FICO. And that is the privately held company, Fair Isaac and so forth. So we'll talk about Credit Karma in just a moment. But FICO uses the information provided by the credit reporting agencies to determine your FICO score. They own the algorithm, and it's has a copyright and a patent on it. Your FICO score evaluates 5 main categories, and each category has a level of importance. Now, Credit Karma provides you with actually what is called the Vantage Score 3.0, which was developed by the 3 credit bureaus as an alternative to the FICO scoring model. Now, I encourage you and your students, family, and friends to get into the free Credit Karma so that you can get a baseline. But do not be surprised if you go into a lending institution and your score is different, because they are not using Credit Karma. They are paying for the use of FICO. In addition, there are some lending institutions that choose not to pay FICO, Fair Isaac, and they have created their own scoring methodology using their own algorithm. And so again, you might walk in happily with your Credit Karma score and they might say, Karma Sharma, we don't care. This is our lending score. And obviously, there you are. But I do think that the Credit Karma gives you a baseline. Then we've got the latest thing is Sesame. I want you to be very studious about researching all of these, because I'm going to share with you that I have not ever seen anything that didn't have some sort of a catch. Credit Karma, while it's free, your information is being used by everybody that advertises with Credit Karma. So they tell you that up front, that you don't have to pay for your score, but you're now going to get a lot of information from a lot of different places. I haven't had a chance to really investigate Sesame, but Open Sesame, but I would tell you to be eyes wide open, see what it is they've got going. So what counts in the FICO score? Well, look at this nice little chart, because this is the most important thing that you might learn today. 35% of your score is based on-time payments. So when we said one late payment could impact your score, yes, it can. So pay attention, because you're in the driver's seat. You can make on-time payments. Then capacity used. So what we're talking about there is that if you have a credit card with a $5,000 limit and you have a balance of $4,500, you don't have much capacity. You've used up most of it. But if instead you have a $5,000 credit card and you have a $500 balance on it, that tips the scale and the capacity use is very tiny. So the more room you have, the higher your score goes. Does everybody understand that? Because I want to make sure I'm not, muddying the water. The length of history is something that you can't control, but you can, and that's why your question, Maria, about starting someone out at age 18. Yeah, time to get that credit history in place, because if you wait too long, that just goes against you. But again, it's only 15%. Then 10% is new credit. So if you're looking at new credit inquiries, and then the types of credit. FICO likes people to have diversification. So they're excited if you have a mortgage loan and a car loan and a credit card. But again, those are such teensy little pieces of the big score. You have 65% of your score is within your control, which means that you should be paying attention. So I want to remind you that if you have credit cards of any kind, you have the right to call up your credit card companies and ask them to change the date that your payments are due. So let's say that your payments are always a little late because, gosh, that paycheck doesn't get there in time. Well, call up your credit card company and say, I can't make it on the 15th. I'd like to change my due date to the 26th. Your original due date was just an algorithm. They just picked it out of the air. Doesn't mean anything. So if you think that everybody has to pay MasterCard or Visa on the 15th of the month, it's not true. Somebody's on the 5th, somebody's on the 10th, somebody's on the 25th. You can change that, especially if that will help you with your on-time payments. Well, how can you manage your credit? The first thing I want you to know is that no one can repair your credit except you. So please do not fall for someone saying to you, oh, I can really get you out of this mess. You just pay me $5,000 and then I can make it all good. Don't do it. Instead, give that $5,000 to your credit card company. So pay your bills on time. Notify your creditor if you cannot meet payments. They'll work with you. One of the most often used excuses is, oh, I just, I'll call them sometime. I hate to talk to people like this. I will tell you that whether it's your house that you're concerned about losing or your car that you're concerned about losing, contact your creditor. They don't want your car. They don't want your house. What they want is to keep you in your car and in your house. And so talk to them, find a way to work through this. And when I work with individuals who suddenly go, my God, you were right. Oh my gosh, I got a forbearance. I don't have to make a payment for 3 months. I can breathe. Yes, you can breathe. And they'll say to me, and they said to me exactly what you said they would. We want to keep you in your house. We want to keep you in your car. They do. So contact your creditors if you're having a struggle. Obviously, borrow only what you can afford to repay and understand each of your credit contracts. Promptly report missing credit cards and notify a creditor if a statement is incorrect or not received. And give out your credit card number over the phone when you initiate the call, not when someone calls you. A bank or credit card company will never, ever call you and say, I'd like to confirm your number, CJ. No, they know my number. They gave it to me. So don't fall for that. And please shred any documents that contain those account numbers. We'll be talking next week about all the fraud attempts. One of the things I'm going to encourage you to do if you are not doing it now is to do a credit check on yourself. So you are entitled by law to 3 different credit reports every 12 months. So I'm going to repeat that because it's not in a calendar year. It's every 12 months. So I encourage you to think about giving yourself a gift. So Thanksgiving is coming up. So I would make a tickler system to check my Experian credit report at Thanksgiving because I'm thankful that I actually have a credit report and it's not too bad. Then I'm going to give myself a Valentine's gift. And in February, I'm going to get my TransUnion credit report because I want to be my own Valentine. Now, the reason I'm doing it right around the holidays is that I want to check my credit before the holidays in case someone steals my identity over the holidays. And I want to check my credit after the holidays to make sure no one did. Then on the 4th of July, I'm going to let myself be independently wealthy and I'm going to get my Equifax credit report. And then I'm going to start that cycle all over again. Please take a note of the annualcreditreport.com. That is the free, legitimate site to get your credit reports. Oftentimes, because you are thinking in the plural, you'll add an S to reports. That will take you to a fraudulent site that will ask you to pay for your credit reports. So make certain that you're paying attention to Annual Credit Report, singular.com, and check your credit. You want to do that so that you can make certain that you can actually see what's going on. So, yeah, can you get a free credit report, not just the snapshot of it? So that is what you're getting from Experian and TransUnion and Equifax should be a full credit report. And that's why you're doing it one at a time. So thanks for that question. So let's change gears and talk about debt, because we do have such a thing as good debt. And it's loosely defined as debt that brings some form of long-term benefit to the customer. And it's purchasing an asset that will appreciate or increase in value. So yes, we do have that diploma or that secondary education diploma, that graduate degree, because we do know that continual learning pays off. So I want to make certain that we're always including the fact that whatever job, whether it's a trade or whether it's what we would call blue collar, white collar, we're going to need ongoing education in every field. That's exactly what we know to be true. In 2021 and moving forward. So whether it's a certification, an apprenticeship, or whatever, it's going to be helpful to us. And so that debt will be a positive thing. Now, for most individuals who decide to be homeowners, that will increase in value, that will appreciate. We do know of situations where, sadly, we've had a topsy-turvy market, so it's not an absolute guarantee, but it happens to be more true than not. So that's what we call good debt. Well, what's bad debt? It's when you borrow for things that immediately go down in value or will likely go down in value. So yes, do I want a new car and that new car smell? Nobody's ever been in it before. You bet I do. But not when I realize that when I drive it off the lot, I just got my rear end of my car off that lot. And now my car has depreciated, they say today, $3,000, regardless of the model. Yikes. I'm thinking about that gently used car now because it's already depreciated in value. And do I love travel? Absolutely. But let's face it, once you've been on that wonderful trip, you've got good memories, but you've still got debt. No way to turn that into big time assets, perhaps. And a good cheeseburger and fries, you bet. But once that's gone, that's gone. So what do we do about debt distress? And what causes it? Well, using credit card cash advances to pay for living expenses, that would be a signal to you that you're in the danger zone. If you're using the overdraft protection plan on your checking account to pay monthly bills, another indication. If we're using our savings instead of our emergency fund to pay bills, we ought to be going, uh-oh. And if we're using one credit card to pay another, that's another signal of debt distress. Additional debt distress, accessing payday loans. And I'm going to tell you that there's a really nice, sexy way to do that because it's actually at Wells Fargo called advanced direct deposit. And I will be the first person to say that I fell for it. Some time ago, I was in between jobs and doing a lot of contract work. And so I did have one opportunity for a payment, direct deposit. And all of a sudden I was on my account looking at it and I was a little short of cash. And I thought, oh, wow, look, and just click here and get some of that advance payment. Well, I did click there. And you bet it showed right up in my account. And I was happy until my paycheck went in and then it disappeared immediately because, oh, I'd already spent that. It can take you a long time to recover. And it took me about 3.5 months to get back on my feet because I was in a deep, dark hole of payday loans. Being over the limit on one or more lines of credit, you're just continually paying more fees. And this is the one that breaks my heart. The fact that we would delay medical or dental visits because we just don't have the money to pay. Those are life and death situations that we need to be careful about. So how can you manage debt? Well, the first thing is to absolutely do a reality check. Assess your debt situation. And I know so many people, colleagues, family, and friends who just want their head in the sand because you know what? It's too much. I know it's too, I don't want to know. But it's the only way we can start to manage it. Because then we can set priorities for getting out of debt. Then we can calculate the repayment options to get out of debt. And we can identify ways to avoid or correct debt. But the head in the sand thing, not very doable. So this is just a little spreadsheet. Other people can come up with something that's much more snazzy, but it might be that I put down the balance I owe. What's the monthly payment? What's the due date? The amount paid and the date paid. And maybe I can pay attention. Well, let's talk about bankruptcy as we wrap up, because it's important for us to understand that bankruptcy is alive and well. And if that's where you have to go, that's where you have to go. But there are some consequences that you need to pay attention to. Stays on your credit report for 10 years, does not forgive all debts. It's part of a public record. And obviously it makes it challenging to get a new credit card or loan. So what's our recap? If used correctly, the advantages of credit outweigh the disadvantages. Lenders take into consideration the 5 C's when they decide to lend you money. Good debt is purchasing an asset that will increase in value Bad debt is purchasing an asset that will lose value. And a good credit history and high credit score, it equals financial flexibility. I want to challenge you to your own personal financial wellness challenge. I'm encouraging you to identify perhaps one new strategy to employ to make a positive impact on your credit rating if you do have a credit history. Please take a moment to review your credit report. Just pick one, easy peasy to get on and get that. Then create a tickler system to access your other 2 credit reports. And do a little check-in for debt distress. Next week is our last session, and we're going to focus on alternative financial products and ID theft and fraud. So don't miss out on that. But I do want to answer any questions. I know the time is up, but I want to make sure that if you've got a question that we haven't answered, that I can take that as at the moment. Otherwise, I hope this has been a good investment in your time and that you've learned something.
Yeah, thank you, CJ. Miguel, were you about to say something? Sorry.
No, that's all right. Yeah, I just wanted to say, is there any such companies or persons or agents that actually work straight with credit bureaus and boost up your credit if they ask you something in return?
So I'm not sure that I understood the question.
So let's say if you're let's say for example me, I just went into bankruptcy, but I don't wanna wait the 2 years or 3 year period for you to start applying credit again. Is there any agents or someone that would boost that up and eliminate the wrongs on your credit, like my bankruptcy, for example? Okay.
So
I always want, because I know there's a lot of people. I met people that they say, "Hey, I'm charging you $2,000 to give you 2 months boots worth of." All right.
absolutely not. But I will tell you that, and maybe Maria can check this out for us, but there should be a nonprofit credit counseling organization in your community. They are as long as it's nonprofit, then you can go in and speak to them and see what they know and what they might be able to suggest that you do, because their entire purpose is to work for you, not for someone else.
Right.
And they may charge you a sliding scale, but they also cannot repair your credit. So
Right.
Thank you for that question, because Miguel, it's all up to you. Don't give anybody money to do anything.
Right, that's why I hold back. That's why I hold back on my on doing that, because really my credit was really bad. So my only way out was to do bankruptcy. But my questions were in between of, you know what, I want to go back to school, start my own business eventually, and let's say I graduated before. But I mean, I know I have all the skills to start a business, but I just don't have the funds. Is there ways for people to actually help me out, even though I have a bankruptcy, to get a money lend from for a startup business, for example?
There could be, Miguel. So I'll give you just a couple of things to research. There are oftentimes what we call angel investors, and they are individuals who, they're angels because they're good guys. We also have investors that we call vultures, who want to take your company and your idea and run with it. So angel investors are people who might be willing to give you a leg up and not take your company, just be a silent partner. I would look for anyone in the community that might have started a small business incubator. That is very popular in some areas. And sometimes it really is something as strange as just a big old Quonset hut that have a lot of people in it that are sort of working together and throwing out ideas. And then, there's other funding from the federal government to help somebody start, a bagel company in an enterprise zone or something. So I would get with your small business administration. The SBA has offices all over the country. Google it, see if there's somebody close by, and go and talk to them. They have, especially with COVID and the federal funding, there's a lot of money out there, and you just have to figure out who has it. But I would look for some of those programs through the Small Business Development Council and see if there's some access to something there. But thank you for being wise and staying away from anybody that is promising you magic for a couple $1,000. There's
So
no
I just
magic
laughed.
out there.
I just laughed. I just laughed when I heard it, But I mean, hey, yeah, I just have to get a second opinion on it.
So thanks for asking.
And I'll research that nonprofit credit counseling and follow up with you and everyone on this call. So,
Thank you.
Good question. Thank you, Miguel.
All right. Well, I look forward to seeing you all next week, and we're going to talk about some great stuff next week, especially the scariness of the identity theft. So looking forward to it, and we'll see you in a week.
Thank you, everybody. Have a good weekend. Thank you, CJ.
Bet.
Bye.